Happy Friday in the bank world, isn't it? Ian Mackay, Jess Staley, there was a palpable sigh of relief. He was able to reward the shareholders, HSBC, buybacks.
Sure.
How's your world looking at the moment? Is there a shift in gear in terms of optimism?
It's the best it's been in a decade. We had a board meeting of the top 40 biggest institutions around the world, CEOs and chairmen. We did that a few weeks ago. It was the most optimism I've seen in a while. They take enormous costs out of the system. We got an upward sloping yield curve. Trading volatility helps in the trading front. Capital rules are now coming into greater focus. So, in fact, it looks pretty good, yes.
We talk about the volatility. Jess said to us yesterday, to Anna yesterday, look, January, February were great for volatility. It's a renaissance. I suppose we've cut so much. You've got various investment banks have cut back quite aggressively. I just wonder, have they cut too far to deal with perhaps a new shift? I talked to you about the bond market, 1994. We haven't seen a run like this since 1994. Right. There's a few more staff around then to deal with these things. Is there an issue between volatility and talent?
Well, they're certainly trying to keep on to talent, and that's tough. It's a competitive market. But there's been this really aggressive effort to take costs out of the system, to reinvent themselves in a whole different era, in a digital era. And I think they've successfully done that. I thought Jess's comments yesterday were spot on, and I'm glad to see him doing so well.
Are there any systemic threats that perhaps, we become myopic, don't we? We go, oh, gosh, Davos. We all went to Davos. Yeah. It's great. Hurrah. Everything's good. Your guys and girls came in and said, it's great. It's good. There you go. It blew up. Vol blew up in terms of closing down products, sophisticated products that were developed by bankers to sell for fees. Are we overlooking systemic risks? I
don't think those are systemic risk issues. Those are esoteric products that need to be sold to sophisticated.
Isn't it reminiscent of 2008?
No, I think it's completely different. What I do worry about is more medium-term concerns. The headlines out of the OECD this week about huge run-up in debt, whether it's the sovereign, household, or corporate level. I think those are medium-term problems, not short-term problems, but problems that ought to be addressed.
Where's the biggest debt issue? We see the fiscal stimulus coming in the United States of America, $1 trillion of paper being issued to the bond market, and I look at China's debt to GDP. Where is the biggest concern about debt? How much did they talk about the twin evils in the United States of America of deficits and budget gaps?
Yeah, the twin deficits are coming back. It was in topic of the 1980s, and we're revisiting them. But the U.S. fiscal front is not sustainable. We're going to run deficits of 5 to 6% into perpetuity. It will add $14 trillion to the U.S. debt over the next 10 years. That's not sustainable.
Where are we on the consolidation story? Because I look at the Swiss banks. You've got Credit Suisse in change mode, UBS down the track. I then look at the Germans, Deutsche and Commerzbank, really in change mode. What is the probability, in your view, of consolidation somewhere, cross-border consolidation, this side of the pond in the near term?
Oh, I think it's coming. First, regulators have to send a signal that it's allowed, they want it, that bigger is not bad, that we do need to see cross-border consolidation. I think it's the next leg in taking costs out of the system, and I think ultimately it's good for consumers. I think it's coming.
Do you think that we'll see a sort of a big change in regulation? I did a roundtable with Axel Weber. We were over at the Bundesbank a couple of weeks ago, and we were talking about the differential landscape, the regulatory landscape here versus there, and that gap. And there is that itch in the CEOs and the chairman's backs that, it's a harder touch in Europe than it is in the United States of America. Is there going to be a progressive change in regulation in the United States of America for big banks?
No, there's no rollback. It's a bit of a myth that there's some sort of deregulatory effort. We saw the Treasury just come out with their latest report the last couple of days, on Wednesday, actually. It really is about fine-tuning and better balance. We actually promote international consistency across regulation. We think that it should be harmonized, but each country has its own unique set of circumstances.
Are we at the peak of capital requirements? Because, again, the one word which permeated through the interviews that we've done is about buybacks, it is about dividends, it's about reaching the end of a very aggressive road about rebuilding balance sheets and confidence, isn't it? Are we going to shift into a new paradigm of return to shareholders?
Yes, well, that's what they should be doing. That's what they're in the business of doing. But yes, capital, we have more capital and better quality capital than we've ever had in history. We could withstand the crisis again 2 or 3 times over. We have more liquidity. And so it's time to remind ourselves that we do have shareholders and return capital to them.
The cross-border flows, you talk about those in your notes, and you talk about emerging markets. I'd just like to touch on that as we go to the close, because you said, look, recent volatility has been interesting, and you talk about mini boom and bust cycles within EM. I'd like to can you just develop that for me? They've been increasing a little bit since November, as you said. So just give me your view in terms of the flow around the world.
Sure. In the last 2 years, we've seen a real recovery in capital flows to EM and especially frontier markets. We had a conference here yesterday with Bloomberg. So we've seen a robust flow of capital into markets globally. But what has been missing is FDI. We do see FDI into frontier markets, but FDI is not occurring in emerging markets or developed markets. So that may tell us something about investment regimes or supply chains. But the future of those capital flows will be determined by volatility and the larger dynamic in the developed markets.
The one thing that I'd like to finish with is obviously the tax reform is one of those lines that came out in pretty much all of the bank reports in terms of the upfront hit that they took from tax reform in the US, welcomed by many. What does it mean for your members in reality?
Oh, it's great for them. It's both a reduction for their rate, but it's also supportive of economic growth. And the best thing for banks is an upward sloping yield curve, take costs out of the system, better fees, but at the end of the day, it's about a robust macroeconomic environment.